Good morning, friends. Welcome to Ecoholics YouTube channel. My name is Avinash Agarwal, and in this video, I'll be discussing with you important current affairs for 8 June 2024. Today, I want to discuss a very important document with you guys. So, RBI has recently had its monetary policy meeting, and they have come out with their statements. They have come out with their findings. That is what I want to discuss with you. So, I don't know whether you all are aware of this or not, but the governor's statement is a treasure trove of economic information regarding what's happening in the Indian economy, regarding what's happening in the global economy, what is our linkage, what is our relationship with the global economy, and so on. That is what I want to discuss with you. This is the governor's statement right in front of you, and I want to spend some time talking about this statement. I want to cover this statement almost the way I do it, paragraph by paragraph, in a very systematic manner, so that you have a very complete and a very clear understanding of what has been mentioned in this particular statement. I want to read this statement alongside you, right? I want to highlight the things that are important for you. And of course, then this document you can download through the Ecoholics app. You can do a very quick free registration if you have not done. Go to study material section, go to current affairs, and you will get this document. So rather than giving you anything else, I want to give you the governor's statement. I am reasonably sure that most of us have never ever in our lives opened the governor's statement and have read it thoroughly. That is what I want to do for you. I want to make you do it. I want to make you do a thorough reading of this particular document. You will realize how beautiful it is, how important it is, so that in future going ahead, whenever you get an opportunity, you will yourselves do the necessary spade work. So thank you for joining in. Manas, good morning. Thank you for joining in. Charulata, good morning. Let us start. So this is a very important statement, governor's statement of June 7, 2024 is what we are discussing over here, right? So some portion of it I have pre-read. I have read the document. I have highlighted some portions of it so that we are able to gather the initial momentum, and then going ahead, I will read alongside you. So this particular paragraph is giving you a general sense of what's happening. So the basic idea is that we are seeing multiple crises evolving on a global scenario, one after the other. Like for instance, there was pandemic. After that, there was a Russia-Ukraine crisis. After that, there is an Israel-Palestine crisis. Right. China and US are always on the they are always on a simmering mode. There is always tension in their relationship. So there are a lot of crises that are evolving on the global stage. But irrespective of that, Indian economy has exhibited strong growth momentum, strong financial stability. So that's a good thing for us. Now we are living in an era where there are a lot of challenges. What are the challenges? For instance, technology is evolving. As we speak, technology is evolving. Whether that is your chat GPT, or whether that is your blockchain, or whether that is your robotics, or whether that is your analytics, right? So technology is evolving. Supply chain realignments are happening because of near-shoring, friend-shoring, moving out of China, moving into Vietnam, moving into India, and so on and so forth. Kind of realignments are happening. Trade and financial fragmentation is happening in the sense that Russia has been, let us say, cornered off from the trade world or the financial world. Iran has been, cornered off. Okay, so trade and financial fragmentation is happening because of the geopolitical scenario that is evolving. Climate change is also a challenge. So these are the major macro challenges that not only we face as a nation, but a lot of other countries are also simultaneously facing these kinds of problems. What is our strength in this entire scenario? Our strength is that we have a favorable demography, in the sense that there is a young population base that can work, can generate income, not only for themselves but for their entire country, which will be very helpful. So our favorable demography which can work is a very good advantage for us. Our productivity and technology is improving. The firms that we are having are becoming better and better in terms of these parameters. And there is also a conducive policy environment. If you look at our fiscal policy, monetary policy, if you look at the capital expenditure policy of Government of India of late, so all these policies are aligned in the right direction, right? So this is the general introduction that is forming a part of the governor's statement. If there is any doubt, please ask. Moving ahead, what is the important decision that RBI has taken? So RBI has taken the decision of keeping policy repo rate unchanged at 6.5%. What is repo rate? So if you're a bank and I'm RBI, and if you need money, you can borrow money from me at the repo rate. That's the basic idea of repo rate. Repo stands for repurchase agreement. We discuss all of these things in great detail in our theory classes. If there is any doubt, you can ask me. but essential idea is that repo rate is a rate at which RBI lends money to commercial banks, let us say. So RBI has kept that repo rate unchanged at 6.5%. Why? See, the monetary policy and the repo rate, etc., are decided keeping in mind what is happening to inflation. If inflation is on a rising trend, we will be increasing the repo rate. If inflation is on a declining trend, we can think in terms of reducing the repo rate. If we are not sure how inflation is going to behave going ahead, then we can try to maintain some kind of a status quo until we have better clarity of what is happening. So we are right now close to the third scenario, where some parts of some prices are going down, where some prices are going up. So we are not completely sure that prices have been brought under control. We are in that kind of scenario, is my understanding. So I'll come to that. But important point is that repo rate has been unchanged at 6.5% A. B, your standing deposit facility remains unchanged at 6.25%. What is standing deposit facility? So let's say that you are a bank, I am RBI, and let's say that you are sitting on some surplus money which you want to park with me because you don't know how to use that money, where to use that money in the immediate scenario. So rather than keep that money idle, you can invest that money with me, or you can deposit that money with me. I will give you some interest, and that interest is your standing deposit facility, which remains unchanged at 6.25%. Similarly, your marginal standing facility remains unchanged at 6.75%. What is marginal standing facility? So let's say that you're a bank and you meet some unanticipated liquidity requirement, meaning that suddenly you realize that, okay, you need some amount of cash because of, so that you can honor your liabilities, or so that you can honor the requests of withdrawal, etc., etc., whatever the case. So let's say that you have such kind of an unanticipated liquidity requirement, which is, let's say, quite large, more than what you can borrow from the repo rate window. Then what do? So you borrow under the MSF window. So this MSF window helps take care of these unanticipated liquidity requirements. So three terms should be very clear to you: repo rate, standing deposit facility rate, and MSF rate. If there is any doubt, please ask. The overall stance of RBI has been withdrawal of accommodation. What does withdrawal of accommodation means? So accommodative monetary policy is basically, or expansionary monetary policy is one where you are increasing the liquidity in the system, right? You are increasing the liquidity in the system. You are pumping cash into the system. Why? To boost demand, to boost growth, right? And then when you want to, let's say, go in the opposite direction, right? When you want to go in the opposite direction, so you withdraw the accommodation, right? So the idea being over here that we are withdrawing all kinds of accommodations, that we are still withdrawing accommodations. Let's just leave it at that. Withdrawing accommodations means that we are basically bringing the liquidity in the system under control, so that prices can cool down, so that inflation can cool down. Because if you are able to, let's say, withdraw liquidity from the system, let's say you are able to withdraw all evidences, all traces of expansionary monetary policy from the system, then there is going to be a tightness in the system. Tightness in the sense that probably loans will be slightly expensive, maybe, right? Maybe loans will be slightly more difficult to get, right? Banks will find it a little tight to, go on an exuberant path of lending. So in such scenario, what will happen is that it will be slightly difficult, just slightly difficult to, let us say, borrow money and spend it. So the idea being that since it is going to be slightly difficult, you may not do it. And when you don't do it, you may keep the demand under control. And when demand is kept under control, then prices can come under control. So to reiterate my point, what RBI is trying to do in India right now is that they are trying to bring inflation to close to 4% when we are talking about consumer price index, right? We are trying to bring inflation down, right? That is called disinflation. Trying to bring inflation, the rate of inflation down from, let us say, 5% to 4%. That is called disinflation. So RBI is trying to get that disinflation thing right. And once that disinflation thing is right, then we can reduce the interest rates, etc., etc. So this is what the RBI is trying to do. So I hope this part is clear. Okay. So what RBI is saying is that the inflation growth balance is moving favorably. Okay. So that basically means that growth is also good and inflation is also coming under control, which is not a bad place to be in. When your growth is also good and inflation is also coming down, you are not complaining about anything much. In India, the challenge is that we keep witnessing food inflation. maybe because the Kharif fasal arrived late, maybe because the Rabi fasal arrived late, or maybe because there was a damage in certain regions or in certain crops or in certain sectors, or maybe like for example recently we had a very hot summer, so our water reservoir levels were very low, so probably because of that your Rabi fasal or your Rabi crop may be impacted. So for one reason or the other, in one region or the other, in one segment or the other, food prices keep skyrocketing upwards every now and then. Of course, they cool down as fast as they go up normally, but food inflation in India is a challenge, because of which our prices are at an elevated level. That is what RBI is going to say. So RBI is basically continuing with the monetary policy, trying to bring about disinflation, right? And we want to make sure that we have sustained price stability, because any country or any economy that has sustained price stability can use that sustained price stability as a foundation for strong growth momentum going ahead. So keep that in mind. Now let us talk a little bit about what's happening in the global, the inflation now, right? So they are very clear that they want to bring the inflation down, and accordingly the monetary policies of these banks have been aligned. There is nothing much that is of great importance over here, so I am moving ahead of here. Let us talk about domestic growth. Now domestic growth, first thing that you need to know is what we have achieved, right? How have various sectors performed, right? And how is the demand sources performing, right? So you need to keep in mind that our growth of 8.2% that we have achieved in 23-24, it's a very good number that we have achieved, and we have already discussed about this in this lecture series. We have analyzed, understood and dissected this number of 8.2% of growth that we have achieved as reported by NSO. So India's real GDP growth is fantastic for the time being. Okay, that's good. When you look at our 8 core industries index, when you look at our purchasing managers index for the manufacturing sector, when you look at the purchasing managers index for the services sector, they are all in a healthy space. They are all going in the right direction. That is the basic message out of paragraph 7. Paragraph 8 talks about the fact that private consumption is becoming better. It needs to grow faster, because you have to realize that out of the entire aggregate demand in India, 60% demand is getting generated from the private consumption space. So this private consumption space, it grew only 4% last year. The year-on-year growth for 23-24 for private consumption was only 4%. We wanted to grow faster, because as I have explained, private consumption is contributing 60% to the aggregate demand. So if private consumption grows faster, then it will be overall very good. How will private consumption grow faster? So in urban areas, services sector needs to perform well. If services sector performs well, then in urban areas there are jobs and incomes, and if there are jobs and incomes in urban areas, then the demand from urban areas will be good. So we want this to happen. Secondly, another very important source of private consumption is rural demand. Rural demand is linked with how agriculture performs, how farm and non-farm activities perform. So we want farm activities, whether it is crops or allied agriculture, we need them to perform well. If they perform well, then rural demand will be strong. Okay, so you have to keep these kinds of linkages in mind, that urban demand is largely dependent upon, or is dependent upon, services sector. Rural demand is dependent upon the agriculture space, and so on and so forth, right? So private consumption is picking up. Urban areas may you have good demand. Rural demand is also getting a fillip. Investment activity is gaining traction, right? And we were able to have, or we recorded decent merchandise exports in the month of April, because the global demand is also improving. So you see typically how we define GDP from the demand side: C plus I plus G plus NX. That is what we are talking about in this paragraph number 8. We are seeing that C, that is private consumption, should pick up. I, that is investment expenditure, is showing good traction. G, that is government expenditure, is also going to be in the right direction. We'll talk about it going ahead. And X, that is net exports or merchandise exports, as we talked about over here, is also going in the right direction. A lot of my lecture over here today is going to be seeming that everything is going in the right direction, but please humor me. I'm trying to explain what the RBI is thinking, seeing, hearing, right? And then tomorrow again we can sit and analyze everything from various different perspectives. The beauty of this document, I don't know how many of you all are genuine academics, right? The beauty of this document lies in these footnotes. These are beautiful footnotes, 10, 11, 12. These are extremely data rich footnotes. I will actually try to go through these footnotes with you guys. I don't know whether you all will have the patience or not. But anybody who is a genuine academic, who is genuinely interested in Indian economy, who is genuinely wanting to see what the pulse of the Indian economy right now is, will look at these footnotes very, very closely. I can't do that immediately now because I need to first walk you through the document, and then probably maybe if the time permits and if you all are interested, then we can go through the footnotes as well, right? Paragraph number 9 talks about IMD's forecast of monsoon, which is the forecast is that we will be having above normal southwest monsoon. I hope that you are aware that we have southwest monsoon and northeast monsoon. From a geographical standpoint, southwest monsoon is very, very important. Around 75 to 80% of India's rainfall, if I'm not wrong, we are getting through southwest monsoon. So from an agricultural point of view, southwest monsoon is very, very important. So agricultural sector should be in a strong position going ahead. There is sustained buoyancy in the services sector, which is again a very good thing. Our banks and corporates are sitting on healthy balance sheets. Banks ka NPAs are under control. Corporates are having decent top line growth, decent bottom line growth. Government of India and government of various states, they are putting a lot of money towards capital expenditure, which is also good. Our corporates or factories are utilizing the machinery, so capacity utilization is also in the right direction. Looking at all of these things, RBI is projecting a real GDP growth rate of 7.2% for 24-25. Reiterating myself, looking at all of these evidences in front of RBI is saying that the real GDP growth for 24-25 is likely to be in the range of 7.2%. This is what you need to understand. Speaking about inflation, right? So this paragraph is essentially talking about, let us say, vegetable prices, about core inflation, and about services inflation. As I have explained to you that vegetable prices have been behaving erratically, right? So they are experiencing a summer uptick now, okay, for a variety of reasons. When I talk about, let us say, fuel prices, so fuel prices have been in the deflationary space. What do I mean by deflationary space? I mean that fuel prices have been decreasing year on year. So if I compare recent fuel prices with, let's say, last year's fuel prices, they have actually lowered, right? Forget about increasing, they have actually lowered, and that is because of LPG price cuts primarily. If I talk about core inflation, I hope you know the meaning of core inflation. So you pick up, let us say, consumer price index, remove all the food items, remove all the fuel items. Why? Because these items behave in a very erratic manner. Their prices change quite erratically. So let us remove these items, and then whatever remains, those items show a steady trend of prices, and that basically indicates what core inflation is likely to be. Okay, so we remove all these noisy items, and whatever else remains makes up the basket for core inflation. So core inflation, it has softened for the 11th consecutive month since June 2023, which is a good thing. Services inflation, that has also moderated to a historical low, right? So this is what paragraph 10 tells you, right? Paragraph 11 again talks about Rabi arrival. It talks about global food prices. It says that industrial metals ka prices is going up, right? So we need to be careful is what paragraph 11 tells us. So based on this evidence, what does paragraph 12 tell us? Paragraph 12 tells us that looking at all of these things, RBI is projecting CPI inflation to be in the range of 4.5% for financial year 24-25. We are doing everything that we can to make sure that we achieve this from, let us say, a demand management point of view as well as a supply chain management point of view. So from a demand management point of view, I've already explained to you that we are keeping a repo rate at a reasonably good level of 6.5%, and we are focusing on withdrawal of accommodation. That is what we are doing from a demand management point of view. And from a supply management point of view, we are witnessing decent buffer stock levels for wheat and rice. So if there is any kind of pressure on those fronts, then we will be able to use our buffer stocks to keep the prices down. And simultaneously, we are also expecting above normal monsoons. So supply chain point of view, we are taking care of these aspects, right? Looking at all of these things, what do these ideas regarding inflation and growth, what do they tell you about monetary policy, right? So we are expecting a growth of 7.2%, which is going to be the fourth consecutive year. If we actually achieve 7.2% in 24-25, so that will be the fourth consecutive year of growth rate, real GDP growth rate being above 7%. That is good. right? Headline CPI should be on a disinflationary trend. That is again a positive development. If you see over here, RBI is giving you an important data point. RBI is saying that from the first quarter of 22-23, that means that from April, May, June 22-23 up till quarter 4 of 23-24, that is January, February, March of 23-24. So we are looking at this period from 22-23 Q1. So we are essentially talking about 2 financial years over here. Broadly, we are speaking about 24 months. So let's say from April of 2022 to let us say March of 2024 is what we are talking about over here. So during this time period, your headline inflation has come down by 2.3 percentage points. RBI has been able to bring the headline inflation down by 2.3 percentage points, right? So this is what RBI is saying, that we have been able to achieve this disinflation. Simultaneously, we have been able to achieve decent levels of GDP growth, and had food inflation tantrums not been there, then probably we would have also been able to reduce the interest rates further. So RBI is essentially presenting its report card to you, and this report card is not looking bad by any stretch of imagination from my point of view today, right? Based on everything that I am seeing, right, it's not looking bad at all. Okay, so I hope that this is very, very clear. Another very important clarification RBI has provided in this particular governor statement. So a lot of commentators in India, they believe that the RBI and similar central banks in similar developing countries, they just follow what the US Federal Reserve is doing. So which US Federal Reserve is United States of America's central bank, right? So if let's say US Fed increases the interest rates, we increase our interest rate. If they hold their interest rates high, we hold our interest rates high. If they start decreasing their interest rates, we start decreasing their interest rates. So a lot of commentators with some evidence have developed and popularized this opinion that the principle is follow the Fed, that do what Federal Reserve is doing. RBI is debunking that. RBI is saying that as any good batsman or bowler or a captain on a cricket pitch would do, that we would always be mindful of what's happening to, let us say, the weather situation 100 kilometers away, but we are always going to play our own cricket, our own game based upon local weather, upon local conditions. So we need to be mindful, right? I hope that you are aware of the Duckworth Lewis and all those kinds of protocols that are followed in test cricket and so on, or even in one day cricket, that you need to make sure that your run rate is right if clouds are coming in and you are in a difficult situation, but at the same time you also have to focus on your local elements. So RBI is very clearly saying that obviously we see what US Federal Reserve is doing, but at the same time our monetary policy is dictated by our requirements and not by anything else. So that's a very good statement that's a very good point to be included in the governor's statement. Speaking a little bit about liquidity and financial market conditions. So there are two tools that RBI is using. RBI does a variable rate repo auction, VRR. RBI does a variable rate repo auction when it wants to inject liquidity, and RBI does a variable reverse repo auction, variable rate reverse repo auction, VRRR, right, when it wants to remove liquidity from the system. Reiterating only once, VRR to inject liquidity, VRRR to withdraw liquidity. So depending upon what's the scenario like so far as liquidity is concerned, RBI will choose either of these two. That is what this particular paragraph is explaining. That what did they do? That the VRRR or removal of liquidity was done in first half of April. Injection of liquidity was done in second part of April and in May. Then again VRRR, that is removal of liquidity, was done in the first week of June. So why is it that? So just the way you drive your car, it's not as if that you continuously keep accelerating the car. You don't do that. What do? Depending upon the situation, you will either, let's say, slam the brake or you will press the accelerator. You will not continuously press the accelerator, correct? So that's what RBI is doing. Whenever they feel that banks are in a difficult position liquidity wise, they will put liquidity into the system and vice versa. As simple as that. So that's what the important point over here is. Moving ahead, there is something called as WACR, that is weighted average call rate, right? So your weighted average call rate basically is the rate at which banks borrow money overnight in India's money market. What is WACR? Weighted average call rate. It is the rate at which banks borrow money from the money market, right, on, let's say, an overnight basis. So this WACR should be as close to repo rate as possible, and that's happening. That's broadly happening. So again, not a bad thing. The next paragraph talks about the record surplus that RBI has transferred to Government of India. We have discussed this, analyzed this, dissected this. So 2.11 lakh crore rupees worth of surplus has been transferred by RBI to the central government for accounting year 23-24. This money has been transferred after RBI increased the contingent risk buffer, CRB. After RBI increased the contingent risk buffer from 6% to 6.5%. I have already explained what contingent risk buffer does. Still, I would like to speak one line about it. Contingent risk buffer is like your fire extinguisher. If you have fire and if there is a fire extinguisher loaded with the masala, then you can spray the masala on the fire and then fire will get doused. So having appropriate numbers of fire extinguishers is very important from a fire safety, from a fire hazard point of view. Similarly, in our Indian economy, banks can fall into troubles. There may be requirements to, let us say, support the currency against dollar. Some bank may be failing. There may be some problem here, some problem there. In all these scenarios, what helps is having a war chest of money available with you, which you can use to solve your problems. So that war chest of money is your contingent risk buffer. So RBI has beefed up its contingent risk buffer, and after that they have sent historically high amount of money to Government of India, about which we have spoken at least 3 or 4 times in this lecture series. Moving ahead, Indian national rupee has been behaving okay, right? It is in a narrow range. There is low volatility. Foreign portfolio investors, they were pulling a lot of money out of India in the pre-election season, right? They were booking profit, or they weren't sure what the results are going to look like, or whatever the scenario may be, but they were pulling a lot of money out of India. But despite that, our rupee has been broadly stable in a narrow range, which again reflects well upon our strong economic fundamentals, upon our stability, and upon our external outlook. So that's a good part, right? And that's from that. Now speaking about financial stability, right? So over here we are speaking about NBFCs, scheduled commercial banks. We're talking about their non-performing asset levels, right? So NBFCs are also showing strong financials. Scheduled commercial banks, right, and NBFCs, they are having NPAs below 3% of total advances. So NPAs, non-performing assets, what does it simply mean? So if you are an NBFC or a bank, and if you have lent money to me and I am servicing my loan, I am giving my interest on time, I am repaying my principal on time, so that basically means that, you know, you're happy because you have lent money to me and I am not running away with your money. But if I start running away with your money, if I stop repaying my interest and principal to you, if I declare bankruptcy, if I say that I am unable to, let's say, repay your deposit, then that basically means that you're not happy, right? So NPA typically means that you're not happy, right? So we may want to make sure that your non-performing assets or loans which you are not able to recover, they should be under control. And the fact that gross non-performing assets are below 3% means that banks are in a decent position. They are not in a stressful position so far as their asset book or loan book is concerned, right? So keep that in mind. Apart from that, RBI had warned the NBFCs regarding excessive growth in the unsecured retail loans space. RBI had warned the banks that they are over relying on NBFCs, right? Over reliance of NBFCs on bank funding. So we don't want that. So RBI has cautioned on both these fronts, right? So recent data suggests that there is a moderation therefore in this retail loan space, and RBI is closely monitoring what is happening in this retail loan space. So typically what happens in retail loans is that at reasonably high rates of interest, 13%, 14% kind of interest rates, unsecured loans are given to individuals. These are extremely risky loans. Can be very difficult to recover if suddenly there is a downturn or suddenly there is a black swan event or there is any kind of an issue. So RBI is saying that, boss, we don't want it's your right to do business. You want to lend your money, do whatever you want to do with your money, but at the same time be careful. That is what RBI is doing. So RBI is saying that make sure that there is a prudent balance between assets and liabilities, right? That is what RBI is doing. Customer protection is important, and guidelines on key fact statements are being followed, right? So these are very, very granular things. You can probably just ignore them. Speaking about external sector, right? So they are saying that there is a lower trade deficit, robust service exports growth, and strong remittances. So looking at these three things, that our trade deficit is under control, meaning that imports are definitely greater than exports when I'm talking about goods, but it is manageable. Robust services export growth, meaning that our services are earning a decent amount of foreign exchange. Strong remittances, meaning that there is decent amount of transfer payment that is coming in into India, because a lot of Indians are working abroad and they are sending their salaries, incomes, etc., back home for investment back home to their families. So looking at all of these three things together, current account deficit is expected to have moderated, right? So our software exports are good, our business services, travel exports are good. There are a lot of GCCs or global capability centers that are getting established in India, which is again a very good thing, right? So these are very strong, positive things in our favor, which are helping us earn a lot of foreign exchange. So because of this, our external scenario is pretty good. Speaking about FPIs, FDIs, and external commercial borrowings, right? So FPIs will keep pumping money into India, pulling money out of India, depending upon their own whims and fancies and calculations. But overall, there is a net FPI inflow, because overall Indian economy is doing well. Overall, our stock market is giving decent returns. Overall, the government securities are giving a decent return and they're very safe, right? Similarly, FDI, a lot of FDI has come into India. Greenfield FDI has come into India, right? So our FDI inflows are also robust, right? And ECBs, right? External commercial borrowings and non-resident deposits, they recorded higher net inflows as compared. So amount of ECB agreements, they also grew, which means that Indian corporates, etc., they have started borrowing confidently abroad for their projects, which may be in India or abroad, whatever the case may be. It's again a good thing, because we are using savings which are outside of our country to, let us say, create investments and create expenditure in our country. So growth or demand will be created in our country using savings from other countries. Of course, you have to pay that external commercial loan back, but RBI has been very vigilant, and external commercial borrowing is also in the right space, right? India's foreign exchange reserves, they have touched a high of $650 billion plus. So just keep that in mind. A lot of data point has been provided to you over here. Apart from that, there are certain additional measures which I think that are too granular for me to discuss in this particular lecture. I may revisit this document going ahead, because it's that important a document. I'm going to share this with you. Please also go through these aspirational goals for RBI at the rate 100. So RBI is close to celebrating its 100th year of establishment. So they have kept certain aspirational goals for themselves regarding monetary policy and liquidity management, regarding globalization of India's financial sector, regarding making RBI's supervision a global model, regarding deepening and universalization of digital payment systems domestically and globally, regarding deepening financial inclusion, expanding credit availability, regarding capital account liberalization and internationalization of the Indian rupee, regarding dealing with climate change, regarding adoption of artificial intelligence and machine learning in the Reserve Bank, regarding financial sector cloud infrastructure, regarding transformational shifts in data collection, processing and storage, regarding safeguarding users against payment frauds, regarding developing a secure global financial messaging hub, and making RBI's human resources and infrastructure future ready. So you can see that RBI is having a wide set of targets, tall targets, that does justice to RBI's stature as a very established, very mature organization, not just in India but across the world. So just have a look at those targets. It's a very, very beautiful document. It's a very elaborate, very rich document. I'll be sharing this document with you. I may revisit this document. I want you to definitely look at these footnotes. I don't know whether you will or not, but I really want you to look at these footnotes over here. They are very, very rich with data points, right? Pull out all the important data, all the important macroeconomic data, which is unlikely to change anytime soon, and have that ready as a part of your answers, okay? Because anybody who can put in evidence for whatever they believe, whatever they stand for, whatever their opinion is, that person is going to be highly respected by the examiner, right? So I'll probably try to pull out this data point, the important things in this data point for you at some point of time, but I have done my job. I keep explaining the importance of the same. I'll analyze the same for you, and I've highlighted it for you. The rest is up to you whether you want to make any good use of it or not. That's up to you guys, right? So this was my submission to you guys today. I hope that you learned something new, right? And I hope that this lecture has been fruitful. Ayush has a question. I'm preparing for IES and for current affairs. I'm reading the Hindu and watching your lectures. Is sufficient? More than sufficient. If you're reading one newspaper, whether it is the Hindu or the Indian Express or any other newspaper, and you're watching this lecture series, not just watching this lecture series, but you're actually downloading the note and using it, like I have explained how you are supposed to use it, that typically all my lectures, they consist of 2000 words of written text. You should pull out 100 to 125 worth, 100 to 125 words worth of notes out of the notes that I am sharing. Maximum, nothing more than that, right? You should spend maximum half an hour, 45 minutes gathering important data points, developing an understanding. Because once an understanding is there, it will start reflecting in the answers. Once evidences are there in the form of data points, in the form of analysis statements, in the form of reports, indices, etc., they will start reflecting in your answers, whether it is a written answer or an oral answer in the interview. And that is what the objective of this exercise is, that spend half an hour on a daily basis with me and be sure that you are understanding Indian economy in a very right direction, in a completely thorough manner. Thank you so much guys for joining in. Really beautiful interacting with you guys. And I hope that these lecture series are useful for you. I'll meet you all again on Monday. Until then, thank you very much. All the very best. Jai Hind. Take care. Bye bye. See you. Good night.